Hey, everybody. I'm here with a friend and insurance client who's also involved in crypto. I'm not going to give any specific financial advice to her or any of you. Everybody has to do their own research. But we're just going to talk about some of the ways I think about things so she could figure out what best to do for her own situation. So fire away, friend.
Great, thanks, Hutch.
Sure.
So my first question that came up is I have a crypto. I invested in a crypto hedge fund, and it's done really well. And I've been wondering, I've been hearing or watching when I watch crypto videos. You know, a lot of the traders, they talk about taking out a certain percentage, so you capture some of your gains. And it sounds like a lot of them are reinvested, but you still take a certain amount out. And I'm wondering, with the hedge fund and my own crypto that I bought, like, do I do that? Should I be making withdrawals from my hedge fund? And then I'm also left with all these gains that I'm realizing, oh, I've got to pay short-term capital gains tax on that stuff. So just getting more strategic about capital losses and just managing the whole portfolio to anticipate that kind of stuff. That's the first question.
Sure. No, that's a great question. And, you know, the same thing came up with people as they were investing in tech stocks in like the late 90s, leading up to the bubble in the early 2000s. And, you know, there's all kinds of gains leading up to it. And it's kind of a double-edged sword, like a damned if you do, damned if you don't. Like if you withdraw some of the funds, then you don't have as much compounding for you on the way up, and then you won't make as much in the way of gains. But if you don't, it's compounding for you, but also in a taxable account, which you have this hedge fund in a taxable account. I know I talked to you about seeing if you can put it, you actually have some self-directed IRAs and Roths, and they wouldn't let you do it. And so the only place you can keep this fund, and I believe, what did you make? Like 100 and some percent this last year?
No, this last year I think was 200 something.
Okay, which is awesome. The one thing I want to presence you to, though, is it's not necessarily a record, right? Had you just had like a portfolio, buy and hold portfolio of some large cap, Bitcoin, Ethereum, and even some of the emerging kind of mid caps. And I know you got some Luna in your Roth at 35 and you've done well, like even coming down today, it's at 55. But had you kind of staggered some of those, you know, you might have done better. But without all the trading to generate the gains, you would have bought and you would have had realized gains, but not recognized gains. You recognize gains when you sell. And I know we talked about that, but you were a little uncomfortable just because you didn't really know what you were doing. And these guys did. Like the person that has a hedge fund is a friend, and he's obviously good at what he does. I mean, because he has a lot of money and it's hard to kind of concentrate investments, if you will, in that hedge fund. So he has to really spread things out. So it's a nice return. But again, in a taxable account, when you have compounding short-term gains, even if they're 200 and it's doing really, really well, you also have this compounding tax, and it's just going to get worse and worse and worse unless you withdraw. Now, the problem is you're thinking, gosh, where else am I going to get 200% gains? So if it were me, and this is not investment advice, and you have to do your own research, if you believe in the space, and I'm not sure if you do as much, as I do. And it's ironic because when I was helping you with insurance, I was really kind of new to crypto and hands off, and then I really got into it. Now I'm just like full degen. But if you believe long term in the space, I would actually start to siphon some of the gains off of that and at least keep the account flat, because then you won't have a compounding tax. Like it'll just be kind of a steady tax on this amount, or even pare it down over time. And insofar as you want to maintain exposure, I would move that to the more buy and hold. And like we're having dips right now in everything. And we don't know if this is the bottom. We don't know if we're going into another bear. But if you do it in almost a DCA deleverage way, like you're not just wholesale cashing out of the fund and just going all in on crypto right now. But if you do it as these gains are coming out and you start to pare down and maybe you take a little bit of principal with it, then the fund balance will just slowly go down, which means this compounding tax liability will go down. and you could start to move into stuff that you believe in long term, and you're not going to recognize any tax on that until you sell it. So that's one approach. What do you think about that?
It sounds good. Can you explain to me when you say pare down, so it flattens, what does that mean? Like,
well, no, paring down means, so to just flatten it, what you would do is you would just take the short-term gains and whatever kind of level you put in or you were comfortable with, you would just take the gains. So the account was always like, what did you put in this thing? Like 50,000?
I put in 25.
25. And now it's up to,
it's probably 165, 170.
right. So that's great. But unfortunately, what's happening is now you have this compounding tax liability, and the number's just going to get bigger and bigger and bigger. So you had asked me, and maybe this is a good time to answer that, should you borrow against your HELOC to pay your tax, or should you use some of the gains? Again, that's full degen, right? To take out money. And it's one thing, because I know we've talked about borrowing against insurance. When you borrow against a HELOC to put in insurance, which has its own set of risks, at least the insurance that you got doesn't go down. So if you need to put it back, it's going to be there. You don't know that with crypto, and you don't even know that with the best crypto fund.
Right.
So you might borrow against your HELOC to pay taxes, and you're like, well, it's no big deal. This fund's killing it. And then we have some crazy bear, and I don't know if they're using leverage or what else. And now all of a sudden, it's extra house debt that you may not want to manage. So unless you wanted to go just full degen here, I don't know if I like that. And I knowing you, I don't think that's your style. So probably what you should have been doing the whole time is to take some of the winnings, to take some of the gains as they were being recognized, as they're being recognized, they're trading them. And instead of putting them right back into the fund, you realize, hey, I just made 100% or whatever. I'm going to take 40 of that or 35 of that and just kind of put it into this other account, which brings us to another option. So, stable coins do have their own set of risks, but there are some very attractive stable coin yields that you can put it into. Now, there's smart contract risk. They could get breached. There's depegging risk, which means even though it's a stable coin, it's supposed to maintain a dollar to dollar, one-to-one peg. In full bears, that peg has gone down 15%, 10-15%. Not lately, and apparently they've done some things, but you can get double-digit yields on stable coins. There's also insurance protocols that you can get to where you maybe give up a few percent of your yield to make sure if there is smart contract breaches or depegging breaches that you're made whole. You have to kind of trust the issuer. And it's like, wow, if we're having that kind of big catastrophic event in crypto, are these insurers going to be around? So, we're in uncharted territory, but that may be an avenue to do that. And then you're at least earning, you're not going to earn whatever, 100%, but you're earning 10, and at least it's there for when it's time to pay your tax liability. That's a possibility. What do you think about that?
And when you say stable coins, what does that mean? What are you talking about?
Yeah, sure. No, they're starting to become more popular in the news. In fact, I think Elizabeth Warren was on TV yesterday saying that they're the next thing that needs to be regulated. Gary Gensler, head of the SEC, has been saying they need to be regulated. So stable coins is kind of a weird thing. When I first heard about it, I'm like, why would anybody want to do this? It's essentially like a crypto money market. Like you put money in a money market, and technically that's a mutual fund that earns a tiny bit of interest, but it's like supposedly always holds a dollar. And a couple times mutual funds have gone off peg, and that's been crazy. But there's two kinds of stable coins. There's centralized stable coins, like USDT, Tether, USDC, Circle, I believe is that what the C is. And the USD is the US dollar, to where they're really just trying to maintain the peg of a dollar. And the centralized stable coins claim that all the investment is fully backed by cash in banks or commercial paper, which is really almost like institutional cash, is very short-term debt instruments from other allegedly stable issuers. But there's the FUD, fear, uncertainty, and doubt about stablecoins, which may be for centralized stablecoins may be legitimate is the fact that they're not being transparent about exactly how much they have in reserves and what is being invested in. So the Evergrande crisis in China, a lot of people are theorizing they had some of that commercial paper. They claim they didn't. And so the powers that be, the SEC, they want regulation there because they're worried that investors are going to get defrauded and that it's not there. Decentralized stable coins, and you own Luna. And I don't know if, have you ever heard of UST?
Mm-mm.
So Luna, the whole existence of Luna is tied at the hip to UST. And in fact, I'll put a video below, but Do Kwon, the founder of Terraform Labs, and he's the one that created
the Terra. Okay.
Yeah, the whole Terra ecosystem. It's all based around UST. And his vision was, Bitcoin was supposed to be peer-to-peer transaction. The problem is there's only 21 million Bitcoin and nobody wants to spend it. So it's kind of turned more into digital gold. Nobody wants to use it as peer-to-peer cash. And so Do Kwon said he wanted to fulfill on Satoshi Nakamoto, the anonymous inventor of Bitcoin, his vision of this peer-to-peer cash. But people want stable coins. And so Do Kwon started this as being almost like I'm not thinking of the name, credit card processing, merchant services for businesses in Asia. He started Terra to be like a cheaper version of that. And so he had South Korean stable coins, different stable coins from around that region in addition to UST, because business merchants didn't want to necessarily accept Bitcoin and have all this volatility. They just wanted to make sure that when they sold their goods and services for what they bought it for, it was holding a peg. And so he made that and was able to do it cheaper than merchant services. And that's what started the whole vision of UST. And I don't know if you know this, but Terra, the reason why Luna people are so bullish on it is because every time somebody mints $1 of UST, whenever somebody goes on that system and they say, I want to do this UST thing, because it's an algorithmic stablecoin. It's not backed by anything. And Luna helps maintain its peg, because every time $1 of UST is minted, $1 of Luna must be burned. And so as more and more people are coming into the system, that means more Luna is being burned. And like, you have some Luna in your Roth, I own some Luna in different accounts. You're the one that told me about the crypto IRA. And I couldn't do my Roth yet. My company 401k wouldn't let me withdraw my Roth funds. So I'm actually looking at disbanding it after I make a contribution in January to set that up. But I did set up crypto IRA. Regardless, I digress. I guess what I'm saying is decentralized stable coins are becoming more popular. And the famous saying by Do Kwon is decentralized money, or decentralized finance needs decentralized money. So more people are moving away from USDT and USDC and to Tether. In fact, or not Tether, US Terra. And it's grown in market cap. I think it just hit the top 20. Whereas like even 6 months ago, I think it was like FDF. So it's gaining steam, which is good for us Luna holders.
Yeah. And does the same rule apply in terms of taking a little percentage? Or
what do you mean taking a little percentage?
Off the gains from a stable coin or from a Luna, or no, because you don't have the
when you say rule, are you saying one of my proposals to you as something to think about as a possibility as far as taking gains?
Yeah.
So just from a pure tax standpoint, it's not necessary, because you're not trading your Luna, right? You're just buying and holding. And so it's not necessary because you're not creating tax. Now, if you wanted to reduce your exposure to Luna, you certainly could. It depends on, I kind of feel like we're just getting started. That being said, if we hit a crypto winter, or let's say UST kind of fails and breaks its peg, lots of people are going to be turning in their UST. They're going to be burning their UST, which means Luna has to be minted, and now there's going to be a bunch of supply of Luna. So there are arguments that Luna could go down, but it seems to be going in the right direction. I think we're just getting warmed up. But again, this is not investment advice, and you have to do what you feel best with. I think in general, if I were in your shoes with this kind of thing that I'm doing well with compounding tax, I would be divesting from that.
Mm-hmm.
and moving it towards either things I was bullish on long term, because there's some things at a discount now, several coins. Doesn't mean they can't go lower. And some allocation to the stable coin, because for instance, and this won't last forever, but if you park UST on the Terra ecosystem in the Anchor protocol and Anchor earn, right now you can earn 19.5%. There's risk,
Right.
but it's not something that should be going up and down. It should be a stable coin.
Got it. I don't know if you can do that if it's in a Roth. I think you might have to.
Yeah, is your Roth through the Gemini account? Yeah, no, you can't. But what I'm saying is, with the money from the fund, as you're divesting from that,
Yeah.
you can take that money,
Right.
open up a taxable account, set up wallet on a Terra station, and you could have that money earmarked for paying some taxes. If you didn't have enough, you could borrow against your HELOC. And if you had that, knowing you could pay off your HELOC, that's good. But you could also set up a stable of stable coins to buy crazy dips if we get really, really low. And you just have your shopping list of projects that you like long term, and you don't have to go crazy with them, but you have some. It's almost like a pie chart of, call it stocks and bonds, right?
Yeah. Diversified.
Yeah, and your bond would be the stable coin. I mean, there's no bonds paying 19%. And even after you pay tax, even if you bought the insurance, you're still looking at high single digits. Net. That's pretty good bond. But it's liquid for you to do what you want with, whether that's invest in dips or pay taxes or whatever that looks like for you.
Yeah. If I did, like, so the Luna, when I saw it hit the 70 and it was starting to go down, so I did think to myself, oh, maybe I should sell some, but I just had never sold anything before, so it was kind of a little bit of a psychological barrier.
Yeah.
But if I do sell, then there are the short-term capital gains to pay on that sale, right?
Exactly. Yeah.
And that's just personal record keeping or something.
Well, and it's an expensive tax, especially since the other investment is already pushing you up. Now, I actually made a video, and it's going to be below in the chat. It's being edited right now as we speak for some year-end tax planning move. There's ways to kind of offset it and create losses and everything else to kind of balance that out. But you have to figure out what your own personal stance is. Is Luna for you more of a trade, or is it more of an investment? If it's more of a trade, then yeah, it will go back up to the all-time high soon.
Well, I didn't go into
I should say that. I don't know that. But then a lot of people did that. A lot of people sold the top and they tried to buy in lower. Now, I know people that try and do that, but then it gets away from them and they realize they want the long-term exposure. So they sell what they think is the top at 75 or whatever, and then it shoots through to 85 and then they buy back in. Right? And so if you think you would be doing that, if you want to maintain what exposure you have to Luna, I don't know if that's the best one to be trading.
Right.
And for me personally, and I know you're still working and making an income, but I got in early on the Solana, and yeah, Solana hit 240 a couple times, and now it's 150, 160. I could have sold that for a gain, but I was going to pay massive taxes. And so it's kind of an unfair system, at least in the States, because when I take a loss, I take it all on my own. Yeah, sure, I can deduct 3,000 against my ordinary income and I can bank the rest, but it's like, if I take that loss, I'm totally on my own. If I sell for a gain, I got a silent partner for like half. I got a couple, right? Silent partners. I got federal and state tax as my silent partners for half. They don't participate with me in the losses.
Right.
And so it's not even an option for me until I hit a year. And that kind of has forced me to be forced diamond hands instead of paper hands, if you will.
So then it's only the long-term capital gains, you mean?
Yeah, it's a long-term capital gain rate instead of short-term. But this is not investment advice. I wouldn't do that with Luna. I've become more bullish than ever just from doing all the homework. And it's hard to value crypto, such a new thing. But two of the metrics that people look at are total value locked, which means how much money is actually on the different protocols on the ecosystem transacting, And it actually just flips Solana, not in price and market cap, but in total value locked. So the fact that we flip Solana and total value locked, but we're below it in market cap, says to me we're undervalued. Same thing with Cardano. Cardano's got massive market cap. And it's just like an academic theory. And meanwhile, there's all this total value locked on Terra, all this stuff happening. And there's more and more protocols happening on it every day. More and more people that are tired of Ethereum gas fees, because Ethereum has the most total value locked, right? They were first to the party. But people are sick of it. It's slow, it's clunky, and yeah, they're going through an upgrade, but it's almost unusable unless you're just a whale. And so more and more of those people I'm seeing on Twitter are coming over to Terra because they realize it's not slow, it's not clunky, it's not expensive. And it's kind of like people want to be where the action's at. There's more and more developers coming. So those are the two fundamentals, total value locked and developer activity. And that's all going the right way with Terra. Not even to mention all the stablecoin stuff. There's tons of money in Tether and tons of money in USDC that if those stablecoins get regulated, a decentralized algorithmic stablecoin isn't under those crosshairs yet. Not to say it couldn't be, but it's not technically a security because they don't have money parked somewhere backing it. It's just an algorithm. And so if all that stablecoin money starts flowing into UST and that gets minted, UST or Luna's going to get burned. So even if the same amount of people are buying and selling us a day, but more UST gets minted, what does that mean for the price of Luna? So I've actually been, and again, not financial advice, I've been buying any relative dip. So I've bought all the way up in the 60s. I bought a couple of days ago in the low and mid 50s. There might be another chance to do that here soon. We might go back down to the 40s and 30s, and people are saying that that could happen. Nobody knows. Like I remember when Bitcoin went up to 60 and then 30s to 40s, and then went up from 40 to 29. Everybody at 29 said it's going back to 17 and 12, and then like nobody knows. But if you're a long-term hodler, you should figure out those ones you want to hold, and you should hold that. I don't know if you're a trader. I think you should leave whatever money you want in the fund as your trading money. I actually think you should have three pockets. Whatever money in the fund as the trading, and just let them do a good job. They've obviously done a great job for you. Have your long-term buy and hold, and sweep. You just kind of sweep. They call that in investing, like when bond yields come in or dividend yields, it's just a sweep that comes in. Sweep the gains to either your long-term buy and hold for things that go up and down, and then sweep some into the stablecoin bucket and just earn that bond-like yield.
I see. The gains from the hedge funds, you mean?
Yeah.
Yeah.
And then you pay a flat amount of tax over here on those gains. You'll pay some tax on the stablecoin, but you won't pay tax on any of the buy and hold stuff till you sell it. But hopefully you won't be selling any of that for a while.
Yeah.
And then once you get into long-term capital gains land, there's other things you can do. There's charitable planning, right? Who knows? Maybe you'll move to Puerto Rico. I don't think you will, but maybe you'll even move to a state with better taxation to where you save some money on taxes. But you get to control all that with this bucket. This bucket's going to generate current tax. This bucket's going to generate current tax. The more you move into this bucket, it has the highest chance of appreciation and the most tax control. This bucket has, I want to say tax control in that it's nominal tax, but you know what it is, and that's the price you pay for having money in stable coins. And then there's this bucket to where you don't really have any control of it. And so the only way to control it is just keep sweeping gains. And some of that you'll just have to cash out to pay your taxes. Yeah. But you can at least control it by managing the amount you have in it. Does that make sense?
That totally makes sense. So I missed my window, I think, for 2021 to take some out because I think I needed to let them know by December. But do I have to be thinking about that too? Does it need to be within the calendar year? Like I should have probably, or
I don't think it matters. Your tax is your tax, which regardless of what you have in there. But I think what you ought to do between now and the next window is start to think of that 3-bucket model for you, and just decide, how much you want allocated to each. Yeah. The other thing you may want to start doing is quantifying your tax. And if you don't have the liquid assets, you may have to borrow against your HELOC. That may be cheaper than whatever, paying interest and penalties with the IRS. You have to quantify that. And then maybe you take a short-term bridge loan from the HELOC, and then until you don't set up your stablecoin bucket, you just keep withdrawing and cashing out and sweeping from this to pay off that HELOC. And then once that's done, then you can start to establish the other buckets. Does that make sense?
Mm-hmm.
And if there's, it's risky, but if there's like not a little dip like today, but if there's like a crazy Armageddon dip, you don't want to leverage so much against your house or your insurance. It's going to put you in a bad spot. But Warren Buffett says, be greedy when everybody else is scared, and be scared when everybody else is greedy. Maybe that's a time where you just clip off a little bit, not something that's going to send you to the poorhouse, but you're still working so you can manage it to buy in low and bring down your average costs.
Mm-hmm. Got it. Is the one exception though, like if like my Luna's in my Roth,
Mm-hmm.
so I'm not going to pay the short-term capital gains tax, right?
You're not, but you're also not going to take it out. You're not going to withdraw that to pay your taxes either, right?
No, but I was wondering if I should be doing the sell when it's high and buy when it dips, and not.
If you're good enough to do it, you should do it. Like if you think you can time tops and time bottom.
I'm not saying I can't, but when
Hold on. Sorry, I meant to. I was gonna show something. I paused the recording accidentally. We started again. Go ahead. I was gonna show you something,
okay.
and to continue with what you were saying.
I just remember thinking to myself, like, oh, well, this is why I got the Roth, right? I don't have to pay tax. So when I saw Luna at 70 and it was going down, I was like, oh, maybe I should sell it and then rebuy when it comes down. But
yeah,
I didn't.
Yeah, it seems like a great plan, right?
I know, right?
Yeah. I'm going to show you something, and I'm going to tell you a story about a friend of mine.
Okay.
Yeah. All right. So, stand by. So this, oh no, that's 48. Okay. So, gosh, this stupid Zoom bar. Okay. So here, this is early December. See this? How quickly this happened?
Mm.
So I had a friend who said he wanted to do exactly what you did. I'm going to just change it to hour bars. This is kind of zoomed into hour bars. So each one of these bars is an hour.
Oh, wow.
We were at 70 and things started to come down. And my friend called me and said, I think I want to sell the top and buy in lower. And I said, well, if you're good enough to do it, then do it. And I said, but I know I tried that in the past once with a small amount of Bitcoin, and this was in the 40s. I ended up selling at like 40, 44, and then it like went to 42, and I was like, I'm gonna wait for it to go to 40, and then it shot back up, and I bought back in at 46. Like I don't want to miss it. And
right.
You can see that in a very short period of time, like this is 1 hour. This is the hour he sold, and he sold in the mid 50s, and it went all the way down to 50. And he thought, oh, at least I got out here. And then this happened, and he decided he wanted to get back in here, and he thought he did, but he placed a limit order instead of a market order, and so it didn't fill. And then he called me later on that day and said, I tried to buy Luna at 61. How come it didn't work?
Wow.
So all this can happen very quick.
Yeah.
If you were good enough to be a trader, I would say trade away in your Roth. But if not, unless something goes horribly wrong with Luna, everything is set up fundamentally for you to be able to sell it in the future without paying tax at a much higher number if you want to.
Yeah. Oh, that's reassuring. Thank you. I thought I was just not leveraging the Roth like I should be. But you're right.
I will say this. That group that you had me set up a crypto IRA with, I'm having a consultation with them about their next level Roth, where it's like you pay to set up an LLC inside a self-directed Roth, and then you can do all kinds of stuff in there that you can't necessarily do. And so there are some great income plays for Luna. And in fact, I'm going to put a description there's going to be a card for the video and in this side of the description, but it's like an hour-long conversation I have with a different friend about different ways to earn income without selling your Luna. And that may be the way to go. And so I understand you don't have a massive amount in there, but if Luna takes off and it's in a Roth, it may be worth paying for the infrastructure to move it from this kind of vanilla Roth you have to the more complicated, slightly more expensive Roth to be able to create income off your Luna without you ever even having to sell it, if assuming you're still bullish on it. But that's my hope and long-term plan, is that I don't ever have to sell my Luna and I could use it to generate income without having to sell it.
Got it. But that's not in play yet.
Oh, it's in play, but it's not in play for a Roth unless you have an LLC. And there may be certain kind of restrictions, and I'm going to find that out. And there should be a video at some point. Once I have it, I'll have a card right up there that you can just click and watch that. Does that make sense?
Yeah. Yeah, that does.
Was this helpful?
Super.
Okay.
Super.
Any other questions on this?
I think just not for this session, but that whole thing you mentioned about quantifying the tax, looking at the whole picture, figuring out exactly what percentage to sweep out of the fund.
Yeah.
I think that's what I also need help with. Like, I don't know how much I should be sweeping. So maybe that's
let me give you a hint on that. And if you can get good information from the fund, I'll help you understand it. You've been a client for a long time. You've referred us clients, and we appreciate that. So ask the fund what your basis is in the fund. Meaning every time you recognize gain and you pay tax, it raises your basis in the fund. So even though you only invested 125 and now it's 160 or 150 or whatever it is, it doesn't mean you have 125 worth of gains that you're going to recognize to cash it out. Because you've recognized tax all along the way, they should be able to compute, that's not even a word. It's like strategery. They should be able to compute what your basis is. And maybe what you do is, since you're going to be paying tax on all the gain, you should be squared up on withdrawing some of the basis. And, it's going to be tricky because there's going to be a LIFO. Maybe you're going to have to, maybe it's last in, first out. I don't know how this fund is run, but ask them if there's a certain amount that you can cash out because you need to pay your tax, that you can cash out without having to recognize any further tax. And maybe you just do that. And that's a way where you pare down the fund right away to start to manage taxes in 2022, because you don't want to have this problem again.
Right. Yeah.
And you could use that amount that you can take out without having to recognize further tax. You're already recognizing tax, which is why your basis went up. And you can use that, and you can allocate some to put it paying tax. And those you already have this bucket, it'll be smaller, but you can put some of the stable coin while you're waiting to pay tax if you are comfortable with all those risks. And maybe you can buy some of this dip, not go crazy in case we dip lower, but maybe you fire a dollar cost average bullet into the dip into some of these undervalued projects.
Mm-hmm. Yeah, that makes sense about the basis. I can do that. I can find that out.
And I also have a video about setting up a Kucoin account.
A what coin account?
Kucoin.
Okay.
Kucoin. It's gonna be in the description, and I'll share it with you.
Okay.
But it's an exchange. It's a very high volume, well respected exchange with very low fees. You can't get actual dollars on there, but remember the stable coins we talked about, Tether. You can buy Tether on a Coinbase or a Gemini, and then you could just send Tether over there, and you could trade. You can get actual Luna instead of wrapped Luna. You can get UST instead of wrapped UST. You can also get some other undervalued altcoins that, if you actually do your own homework, you may want to, nibble a bit on at these levels because they're beaten down pretty good.
Got it. Okay.
Does this all sound good?
Yeah, no, this is super helpful.
Do me a favor. I got a bunch of stuff to do. Shoot me an email. I know I gave you some ideas and there's probably some things I need to send you. Just shoot me an email and I'll get you those resources. Okay.
Okay. Thanks so much, Hutch. Really appreciate it.
Great talking to you.
Great
Talk
to
to you soon.
see you in this world.
Yeah, it's fun. You know what? And I actually, you and your friend, my other client, you guys were a big part of that, right? Just because of your curiosity, it's like, man, they got all this stuff going on in crypto, and they don't even know what they're doing. They don't even understand it. Yeah.
No, you're like woo, way beyond now, but that's good. I'm glad it's on the record that I can claim a little bit of
You absolutely
responsibility.
can. You know how I roll. There's no half measures, right? I like if I'm into something, I'm all in.
I know. I'm like, whoa, Hutch is taken off. That's so awesome.
Well, thanks.
Thanks, Hutch.
All right.
Okay.
We'll be in touch. See you.
Bye.